It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Hello. Ooh, look at that. You guys remember Chris Sabo? Look at me. Old guy with glasses. So yeah, what's up? I'm gonna get my screen up and we'll be ready to rock. Boom. And screen and this and that and here. Before we get started, oh, do you see my screen? You should see screen, right? Whoa. Okay, screen. Everything up. Everything's running. Cool. Let me just make sure my friends are watching. So, missed you last week, right? I was in Bermuda golfing. If you guys are interested in going to Bermuda, be prepared to do nothing. Like, nothing. Not a wakeboard, not a kayak, not a jet ski, nothing. You know, there's only, what was it? Like, I think it was 64,000 people live there, or it was 84,000 people live there, and everybody knows each other. It was a cool feeling. But if you don't play golf, and you don't like just doing nothing, then do not go to Bermuda. But it was good. Me and my son played golf. My son's pretty good. We played. It's pretty cool. So normally when I take a week off, volatility tends to ensue, and everyone was like, "Oh no, Kenny's leaving the country. The market might go down." I'm like, "Not this time. Market never goes down." And as I've been trying to explain to people how do I know that is guaranteed almost at this point that we're not going to go down? It's because I've been a victim to the market as a bear. And I wasn't always a bear. I was kind of born into bearishness because of um, the situation that I got into trading. I started as a broker. And if anybody's interested, we're in SRAD right this second. If you want to join me on a long trade, I'm in SRM and SRAD right now. And thinking about buying the Qs soon. But the reason I'm jaded and cynical, I was born into it. You know, I was taught about dollar cost averaging right out of the womb. My father was always an investor. His father was an investor. To the days when Hartford Financial would go door to door, like an encyclopedia salesman. Back in the day, they'd come to your house and they'd try to sell you, a set of books, which were actually good books. I don't know if you guys know encyclopedia. It was Funkin' Wagnalls when I was a kid. If you guys know Britannia, or I forgot whatever it was, but they rang the doorbell and they're pitching, long-term investing to my grandfather and my young father at the time, and they got involved. And that was when the market really wasn't doing what it does today. This market really kicked into gear once the algorithms took over in '87, which kind of, we'll get to that story in a second. By the way, SRAD about to go green. You only want to buy this stock when it's red. You want to sell it when it goes up. This thing's been trapped in a 2-point range for the last month. But every time it starts the day strong, you short it and it goes down. When it starts the day down, you buy it and it goes up. It is unbelievable. And if you want to make just a day's pay, this trade works almost every day. SRAD. You'll see on the chart. This is what we call, again, faux-show-bro, but affectionately called a Kardashian bottom. Kind of looks like a big butt cheek. Once it gets over the VWAP, There's one butt cheek. There's your tramp stamp right there. The orange line is prior day VWAP. So a lot of what the stock's going to do is already happened. I'm in it because, well, I own the stock also. I'm not selling. I buy a little bit every day. But this is a very interesting company. They sell data to DraftKings and all the live data gambling websites, and that's a big thing. I love, I sports gamble every day. I'm always on one of those sites, and this company's like the backbone of the industry, and it's a nice slow mover. It's being slowly accumulated over the last year and a half. Here's the chart. This is a typical investment from old school trading, old school investing. Consolidation break, consolidation break, consolidation. That was the Trump candle. Consolidation, consolidation, consolidation break. Obviously uptrending, but it's a slow stock. Some of us are getting used to, buying core weave and watching it go up 30 points a day relentlessly, and then tack on another 30, another 30. This isn't that type of stock. This is a normal stock where it's only up 12.5% for the month. I know. It's not enough, right? It's not enough. But that's what a typical stock does. And by the way, 12.5% in a month, right? It used to be, back when I was a kid, if you made 12.5% on the year on a stock investment, you were great, beyond great. That was a major accomplishment, 12.5%. So going back to the days of my dad and me being a broker, so it's hard. I'm trying to remember why specifically I became a bear. I think because of what happened to me and the way I started my career. But there's no reason to be bearish. You can be bearish individual stocks, but you cannot be bearish the market. That's the difference. And that's the part that a lot of people don't get. And I'll explain it to you. Let's put a round number on it, 13,000 stocks. And I'm talking about pink sheets, bulletin boards, small cap, national NASDAQ, American Stock Exchange doesn't exist anymore. It's part of the NASDAQ. New York Stock Exchange, blue chips, all that stuff. You obviously know penny stocks. They're penny stocks for a reason because they're all worthless garbage. But there's about, I think there was actually a number. I think it was 13,000, 14,000 individual equities you could trade on a daily basis, right? Let's go with 13,000. 12,500 of them are garbage. Garbage. There's 500 stocks that control your fate. So that's what makes it so difficult to understand when I tell people individual stocks suck, but the market never goes down. Well, how could that be? Isn't the stocks going up that makes the market go up? No. It's just a very small handful of stocks that make the market go up. And when that handful of stocks, a few of those aren't acting accordingly, what do? You get booted out of the club. So the top 100 stocks on the Q is the QQQ, the number one index that I watch is the top 100 tech stocks and Pepsi, a few healthcare stocks in there. But generally it's tech, Costco, Pepsi. Just look at the 100 stocks. So when one of those stocks stops producing and kind of goes sideways, or my God, actually starts to go down, what do? Bait it. You're not allowed in the club. We got to perpetuate the lie that the market never goes down. So they take the shitty stock and they give it the boot and they restructure. Same reason the Dow 30 is the most misleading index there is. There's only 30 stocks in there. And you know why Westinghouse and Bethlehem Steel aren't in there, right? Because they went to zero. And Zenith. And every so often, what does the market do? It reestablishes the Dow 30 and obviously the S&P 500. So picking individual stocks is still very difficult. Building a portfolio for yourself, and that's why when you hear fund managers never beat the market, because nobody does. And that's why ETFs are the way to go. It's the industry tries to make you feel like you're copping out, like you're taking the easy road. Take the easy road. The market never goes down. But if you bought 10 individual stocks right now, 5 of them would absolutely suck, 3 would be all right, and 2 would go nowhere. But the Qs will be doing this for the rest of your life. Let me just also show you a chart. I was trying to find this one last time we joined. When I say the market never goes down, I like to bust out this chart. Now, you might not see it completely here, right? So this is a stock market chart of the last 100 years, right? And what you will notice is after the crash of 29, it's been in an uptrend ever since. So it's basically a 100-year uptrend. And all those moments that maybe you were around for, 87 crash, dot-com crash, pandemics, China, all that kind of stuff. And right up to where we are right now, insignificant. Farts in the wind. Market never goes down. So if you've been dollar cost averaging the S&P 500 or the Qs or the diamonds, you know what I'm saying. But if you have a stock that sucks and it was a pump and dump and you kept putting more money on and more money and you're thinking, wait a minute, I thought the market always goes up. I'm just going to dollar cost average my stock and it never went back up. It's because most stocks suck. Most IPOs suck. Most stocks do inevitably, even like a Tesla. I'm not saying Tesla's going anywhere, Apple's going anywhere, or Amazon, but even the high flyers. Maybe you were around when iOmega was doing things. Remember iOmega? Of course you don't, because nobody cares. But at the time, right? But at the time, iOmega was changing lives. iOmega was the first disk drive company to make the disks smaller and faster. Smaller and faster, that's progress. iOmega, where's iOmega now? Doesn't exist, because nobody needs what they had. Great stock, went to zero. How about BlackBerry? Remember that? Man, this texting thing's going to be big. Man, we don't even have to make phone exciting. I got my own little network of people here. Man, this texting thing, I wonder if it's ever going to catch on. Well, it caught on, but without BlackBerry, because they got eaten alive by Apple. And where's the stock? Zero. Like fiber optic companies. B2B. So there's always a fad, right? And right now we don't know space rockets, robots, AI, quantum. One of those is a fad. I don't know which one yet. I'm a fan. It's hard for me to be bearish when, to me, that looks like that's progress. And I've always been a chip guy. So let's go back to that story I was telling a bit before. The reason I'm jaded and cynical is that I was born into it. I worked at a boiler room. I worked at a chop shop. And I was mentally scarred, emotionally, literally physically scarred, because I would actually fight some of these guys inevitably. And it was just an awful, awful time. And I saw the back end of the market, where they say as the sausage was made. I saw it, and it was awful. Complete criminality. All that stuff you hate about Wall Street is true. The manipulation, the market makers were complicit. The owners of the company were complicit. And they were literally bringing companies public that did not exist. Did not exist. Just like the movie. Aerotine Industries. They make radar detectors for civilian and military applications. None of it was real. And I was like, holy crap, this is awful. And that's why trading to me was so awesome, because now I could do what I want. If I think Cisco's a good company, I think Cisco's going up, I buy Cisco right now. Is it going up? Yes, it is. Ooh, look at me, I'm making money. Let me sell some and put a stop on and manage my own money. And it was exciting, because now I'm the boss. Nobody was telling me what to sell to my clients. And then I was off and running, and I had a pretty good run. Now, what happened was my skepticism, my jadedness, and my cynical I started shorting stocks early on in 2000 because I never seen that before. Stocks weren't supposed to go up 20% a day, 40%, 200%, 500%. Stocks were running. Analysts were putting price targets on stocks, and they would go there the next day, no matter what the price target. Stock was $40. They put a $76 target on the stock, and go to 76 the next day. I'm like, I'm thinking that's not how the market works. What the hell's going on here? You'd announce a 4-for-1 split, the stock would go up 400%. It was insane. And I was sitting there going, all right, this is going to end badly. Just from what I learned. 8 to 12% is the average. So I always thought reversion to the mean. This is all going to end badly because it's going to have to revert. And considering stocks are up 400, 500%, I'm thinking, man, we're going to crash. And I got in the way for a while, and I was on the wrong side getting killed. And luckily, my mentor told me to hang in there because he saw some signs, the dash for trash, as he explained to me, and just a bunch of worthless stocks really started moving. He said, that's probably bad for the overall market. The market's going to crash. And he was right. And I made all that money back and then some. And I lived off that money for almost 10 years. That's how well I did. But then the shorter was born inside me. I thought, oh, look, my skepticism, my jadedness, and my, paid off. But now it doesn't. The market's broken. And it's broken only to go up. And I know you just laughed. But Kenny, we just went down in April. Did we? Or was it a temporary moment? That moment was corrected and we're off to the races. We went down in May, did we? Or was it a temporary moment? They shook everybody out and then we went back up. So I understand the market goes down, right? But now if you're witnessing what I'm seeing over the last 30 years is you're seeing a market that now it's becoming impossible. Sure, it can go down, but does it ever stay down? No. And we're almost to the point where I think they're just going to stop it from going down completely, where the new down year will be only slightly up. So up 8% will be considered the down year. So as we sit here every day, and what I do each day is I do live commentary for 4 or 5 hours a day, because I do still enjoy talking about this, but what I enjoy most of it is trying to open up the eyes of the old school trader, the new trader, and to people who think that shorting is a viable way of making money in the market. Now, here's where I'm going to bring it all home. Most stocks suck. Most stocks are going to zero. But you still cannot short the market. And right now, it's becoming even increasingly different to short individual stocks. And that's where we're at right now. I just fast forwarded and I gave you a brief history of why I am the way I am. But now, because of my history and all that awfulness and me being crushed by shorting, I did make a lot of money in 2000, but I got hammered in 2008 because I was early and I was wrong and I panicked. I made some of that money back short and Bear Stearns again. But then, because I didn't make enough money on the downside when the crash happened, and I keep thinking, oh, another shoe to drop, I started fighting the market. 2012, 2013. Market wasn't going to tell me what to do. I was going to tell it. That's a bad attitude because you're going to lose, especially if you're a shorter with unlimited risk. So for 3 years, I spent just churning my account, giving up my life savings. Everything I spent all that time making, I gave it pretty much all away. And at the same time, I found VWAP, and volume weighted average price. Somebody introduced it to me. And because it was kind of the style I traded intraday anyway. And my friend Zach Hurwitz, who was a descendant of Brian Shannon, they said, you're trading VWAP almost like inertly, your style. Why don't you just let the VWAP do it for you? So circa 2013, I put this thing on my chart that you see right here. And since that day, I have not changed my chart, not once. We've added to it, and my friend who has reverse engineered what Zach and Brian Shannon showed us back in 2012, 2013, he's taken it to a whole nother level and reverse engineered it, and we've added stuff to it. But my basic layout has been the same for the last decade. You want to know why? Because it's all you need. This trade that I find on a daily basis, I know this might sound silly, especially, and remember, it's coming from me. I am Mr. Jaded, cynical, I don't trust anybody. And you shouldn't trust me if this is the first time you're meeting me. Trust the VWAP. It's the only thing that will never, ever lie to you. And the reason it works so well, just following two lines on the screen, today's VWAP and prior day VWAP, it's because the market is rigged and it is manipulated. And all that stuff you thought about the market, it's all true. The market makers are complicit. The orders are already done. What you're seeing on the screen on a daily basis it's old news almost. But VWAP tells you for a fact that the people, let's call them they who are moving and manipulating and rigging the market, they're telling you the prices that they're going to move it, manipulate, and rig it to. So you embrace your jaded, cynical nature. You accept the fact that market never goes down, and then you let the VWAP prove it on a daily basis. And every day. It's been 13 years now, and I'm talking about every day. Every day, the market proves what I say to be true. So at this point, conspiracy theory, it's not a conspiracy theory. I prove the market's rigged because there are certain prices where the mathematical improbability of it going back to that price, it's insane. It's insane to even think it will do it, and then it does it. And it does it again. And this trade that I talked about, the faux-show-bro, if you're just meeting me, the fake out, shake out, breakout, the trade works. And when you find this chart pattern near VWAP on a stock that's already been pounded, like this SRAD today, or SEDG, or SRPT, or for another one that just had a follow through, APPS or SRM. I'll show you those all in a second. What your job is, and I'm not talking about investing. You want to be an investor? Here's my hint. Here's my tip. Buy the QQQ. That's it. You now, if that's what you want to do, buy the QQQ. Market crashes, you buy more. Market pauses, you buy more. Always be buying the QQQ. Because inevitably it always goes back to all-time highs. And this is now going on since inception. Why would something change? So if you are bearish, and this is what I do every morning, I look outside the window. If the sun comes up, it's a bull market. The only thing that's going to change is if I see a dust cloud of nuclear fallout coming my direction from a bomb that went off, that might derail the bull market for maybe a couple of weeks, because we know, we'd have a reconstruction rally and we would just go on from there, because the market basically doesn't go down. Now, how is it possible that the market never goes down anymore? Well, let me explain. At one point, it was just a small group of people that own stocks, right? Now, even if you don't know you own stocks, your pension plan, your retirement plans, some sort of government subsidy, some sort of government entity, somewhere, somehow, you own stocks. And the money's pouring in automatically. The manipulation comes when the market makers and the brokers and the institutional players, they just keep the money on the sideline, waiting for opportunities. So they have to manipulate the market to go down so they have more opportunity to put that money to work. If you have a good fund manager working for you, then he does the right thing. Most people don't do the right thing. While the market's panicking, they tell you, hey, maybe we should panic too. They churn your account, and you get out, and then you get back in at a higher price. Transfer of wealth. So all that being said, let's just talk about day trading for a second. Because if you could conquer what I show you on a daily basis, minute to minute, hour to hour, day to day, then you could take what you learn with me and you could expand it to any time frame, any market, any stock for the rest of your life. So you heard the phrase, give a man a fish, he eats for the day. Teach a man the fish, he eats for a lifetime. Well, I bring you to the fish. I also catch the fish for you. I uncork the wine for you. I tell you which wine goes best with the fish and a side dish. And I bring some dancing girls along for the ride too, just for the hell of it, because I'm a nice guy. Or dancing guys, if that's what you're into. So this trade, let me show you the anatomy of what we did today. And if you'd like to join me, Kenny Glick at AOL.com. Yes, that's right. I'm that old. Kenny Glick at AOL.com. You email me directly. A lot of people don't do that. And I will set you up with a 2-week free trial. Because, and again, part of my jaded, cynical, not trustworthy nature is if somebody doesn't offer you a free trial to see if they're not full of shit, because most people are, then you can't trust them right off the bat. And what kind of relationship is that if you don't want to show a sign of trust just to get things started? I love the free trial. You know why? Because I need inspiration. Sometimes I'm like, oh man, I'm doing the same thing every day. It's the same people. But if I know 3 new people are here, I'm like, ooh, I get a little pep in my step. Time for me to impress my new friends. And it doesn't take me more than a couple of days to show you some winning trades. So let's show them to you today, right? So why are we looking at solar stocks? I heard Trump manipulated them to the, by the way, it was one of the greatest manipulative shows ever. Solar stocks had been on a tear. And it was after the fact that they said there was some news that was negative about a month ago, but that news was bought. And then you had this unusual moment in solar stocks where they were just outperforming the overall market for the first time in what seems like years. What is going on? Wow. So as the manipulation conversation continues, you finally get a stock to break out of a yearly high. And the night that it did it, the news hits that Trump's coming again after or taking away subsidiaries to hurt the solar industry. Believe in what you want, believe it. Again, I don't think it's a coincidence that it just had this monstrous run right before a collapse. I don't think anything's a coincidence. But who cares? That's all old news now. So the new news is, what are we going to do today? And if you came in thinking you're going to be shorting solar stocks that have already plummeted 40%, 30% overnight, and another 10% this morning, you probably don't want to be a day trader. So just like the gapped up stock on good news, you don't want to buy the gapped up stock on good news. You want to play the fade. And if you ain't fading, you ain't trading. The only time shorting actually still works, and not all the time either, is a fade. Think about it. You're coming in, stock's got great news. What was the one that had really good news today? CERO, wow, drug company. They say they got fast tracked to some whatever. This one had some good news and it still followed through. Again, but most of the time, stock has good news, let's say on earnings. Go back to being jaded and cynical. Doesn't somebody know the stock was going to have good earnings? Of course, because that's how it works. If I work for CoreWeave and I got a buddy who's struggling, unemployed, and I know the numbers are going to be good, hey, Johnny, we're going to report blowout numbers on Thursday. Yeah, try not to tell all your idiot friends. Just buy some calls. Yeah. So CoreWeave reports great earnings because I told my buddy Johnny. Johnny wakes up and he says, oh, thank you, Kenny, for giving me that inside information. I should say that part lower. Inside information. So what's Johnny going to do? Johnny's going to sell. Sell, Mortimer. Johnny's going to sell at least half because he's going to take the profit. So that's why when we come in and we see a stock that's gapped up, we're looking to play the fade. And you short it assuming that profit taking will come along and you'll make some money on that opening fade. That trade sometimes is maybe 2 minutes long. But on the flip side, in a market that never goes down and never will ever again in our fucking lifetimes, we're looking to buy dips. Even on a company that the president said, we're going to try to run this thing out of business. We're going to do our best to kill it. We're going to destroy the solar industry because nobody knows more about the sun than I do. Windmills kill birds and whales. Even your mother-in-law was killed by a windmill. Nobody knows more about windmills. By the way, you ever notice when Trump does that dance? It's like he's jerking off two giants. What dance is that? Anyway, going back to the idea of just buying a dip, even on a stock that they say may or may not be going out of business. That is where the faux-show-bro comes into play in the VWAP break. So here you got SEDG, right? SEDG. Kenny, why in your right mind would you be buying the stock? Because it's down huge. That doesn't mean we're going to buy it. We're going to wait for the setup that we know works. And by the way, this core weave is hilarious. I can't wait to show you this chart. The core weave, and some of my swing traders are still long because 80 gets you 120, 120 gets you 150, 150 gets you 180. But here is the trade. You want to become a successful day trader. Here it is. So stock's getting hammered because of the news, gets hammered this morning, even hammered some more. You know about big half numbers and whole numbers. Well, first of all, I want to show you a long-term chart. I do look at the long-term chart first, and I see the stock, made it all the way back down to 1250. There's a double bottom 1250. It really just made a home at 1250 for quite some time. Yeah, had a little tiny gap in there. And this spot right here, that was around the 14 where it kind of broke out. So I thought if it breaks 1550, you're probably going to 14 bucks today. So that was my idea. So now I'm thinking about buying the stocks. My first buy was when it went to 1450 and it held. And I was like, all right, let's buy it at 1450 because if it breaks, we immediately sell it for a small loss. And it broke. And we sold it immediately. Because if it doesn't hold the half number, that triggers the next leg down to the whole number. So then we went to 14, and there was nobody home at 14. It quickly went back to 13.7. It didn't go back. Went 13.73, and then it hit 13.73 again. And then wham, right back above the 14. So let me stretch this chart out. It's very subtle. So let's say you're buying the stock, and you're thinking, all right, it just held 13.82. I'm going to buy some. As long as it doesn't break 1382, I'll hold on to it. And then it breaks 1380, and it comes right back. That's the fake out, shake out moment. And then earlier, you had this one moment where it broke down from $14.12. So it was kind of a fake out, shake out, fake out, shake out. So now, again, why I love this trade so much is that people who, let's just say they don't know what they're doing, they see a stock breaking a new low and they think, all right, this thing's going to 1250, let's short it. The longs who were trying to play a dip, who were still maybe buying a dip at 1450 like I was, who didn't immediately sell it, it breaks a new low, they sell it. Right, so now you've got twice as much selling and everybody's wrong. Fake out, shake out, breakout. Now, what's lovely about this trade and what's special about it, why it works so well, is that reason. The longs get out and the shorts get in, and they're both wrong. Stock turns, the longs go, oh no, I don't want to let this stock go up without me, fear of missing out. They're buying back in. The shorts, by the way, SRAD, new highs, days pay. SRAD, new highs. You could sell it right now and you could thank me later. If you bought it at $24.60, now you're up 24 cents, typical day trade, 1,000 shares under a $30 stock. You could sell 600 shares right here, go on the offer, throw it in between the bid and offer if you want, look for 13.2485. You want to sell, don't worry about it, I'm not selling any, but if you're just day trading and you buy a $24 stock at the half and you're up 3/8. I'm old school, by the way. I still look at 3/8 halves. You're at 24 and 7/8 on the offer. You're looking for 25, but you sell some here. And you take some money off the table. And you say, thanks. So SEDG, right? Let's keep up with this trade right here. By the way, market never goes down. Ever. Core weave going to 180 today. Right? So SEDG, as you see how it's ripping right now, that's right. You fake them out, you shake them out, you buy there. Now, here's why this trade, not only does it work exceptionally well, right? You're limiting your risk. If I had my bullhorn right now, I'd be saying this part really loud. You're limiting your risk with unlimited reward every time. Limited risk, unlimited reward every time you place one of these trades. So you're taking a trade where risk reward is in your favor every single time, not just once in a while. Every single time, risk reward is in your favor. And here's why this trade is so special. If you're buying the break, and again, I bought the break pretty quickly. I bought the 14 break, and then I added to it when it broke 14 and an eighth or 14.12 because that was the candle where it broke down from. If I'm wrong this time, the bottoms of these candles and the bottom of the day are my stops. So it's defining the trade for you. And here you have your first target on the upside is the blue line, which is the VWAP. Because when stocks tend to find their bottoms, and that's when I found my bottom. When stocks tend to find their bottoms, they revert or go back to the most important average of the day, which is by far volume weighted average price. And why is that the most important price on every given day? It's because that's where the ones that were battling, the institutions, that's where their money went in, which is the only important thing to know. So you're buying a stock with 12, let's say you got the 14, you're basically risking a quarter to possibly make yourself $1.10. And remember, it's not all or nothing. We never sell it all at one price. Now, these red lines, why are they up there? Those were our secondary and third targets on the trade. And why was this target where it hit to the penny one of our targets? Because stocks, and the reason I don't use moving averages, I just use price, stocks go back to the exact same price. It's not a 20-day, it's not a 50-day moving average. Those are insignificant. It's not RSI. I'm not using Fibonacci or stochastics. Worthless, pointless, irrelevant. Price, the exact price. So VWAP and exact price. So where did the stock break down from? Roughly what? $16.15. So what were you expecting it to do? Go say hello to its friend at $16.15. We got a little extra 3 cents on the trade. And that's where the sellers were lurking, just like they were before. So price meets VWAP. Now, here's what's so special about this trade. The better you get at isolating the foes and the shows, you'll be buying down here. Or if you see a faux show, bro, under the VWAP, and then you get back above the VWAP, that usually triggers another new buy. And that's why we're back in the SEDG. Because what do you see here? Let's assume you were long, and you're just saying, oh, I love this stock. This is great. I can't believe I bought it today. Goo goo gigi. You're going to use what? You're using VWAP as one of your stops and the pivot point from earlier. So what does the market makers and the manipulation So when people bought this last move, they're thinking, yeah, right, here we go again. So where do they place their stops? VWAP and prior pivot. So this time it broke the VWAP. They got stopped out of some, and then they got stopped out of that more of it at the pivot. And what do we call that? Fake out, shake out. Uh-oh, back above the VWAP. And in this moment right there, solidifies it by pulling back, holds the VWAP, holds it, and then ensues to another wonderful, wonderful rally. Am I gone? You guys still see me? I'm here and I'm not on the air anymore. What happened? Hang on. Do you guys see me, Max? Check, check. Yeah, all right, see you. All right, good luck. I think I lost the guys on the website. Hold on, let me just try to fix this. Baba Booey, can you hear me yet? Hit the bit. Baba Booey, check, check. Did you lose me on the interweb or on the regular website? Yeah, Max got me. All right, I'm still on stock trades. All right, cool. All right, we're back. We're back. So again, I'm taking this conversation here, right? We're 41 minutes into this whole thing. And there's a reason I'm doing it. First of all, I don't want you to be distracted by selling any of this SRAD, right? We're in the stock, right? We're rocking it, right? We got our SEDG, we got our SRM. And once you put your trade on, most traders are sitting there looking for any freaking reason to say, oh my God, it's pulling back, sell. Oh my God, I'll sell. You're looking for any reason to sell. When you buy a stock in this market right now, you should think, I'm in. You're going to have to pull this stock from my dead cold hands. Unless I'm taking profit or you're going through a very specific price. So let's talk about this SEDG trade. And by the way, see how it got to 16 bucks, and that's where you found some sellers. So now what do you think the stop is? You see that pivot right there? Right above that pivot point, you had a small breakout, which was the half number. So for me, it's the half. I'm not letting it go back below the half, but I got the luxury of being in from 15, low 15s. I just sold some. Oh, wait. Actually, I didn't hear a bell go off. I was supposed to be selling some at 16 bucks. I don't think I did. Yeah, you know what? I didn't, because I'm sitting there schmoozing with you guys. See, I forgot to put the order in. How do you lose money trading? You don't pay attention to what you're doing. All right. It's all right. I only got 300 shares anyway. All right. Well, now I'm just putting a hard stop at 15.49. I'll be good. So now I'm going to sell the rest. Well, not the rest. I only have 300 shares. I did have 5. I sold 5.49. So 15.49 right below that price. So let's talk about some other ones, right? Let's talk about SRAD for a second, right? I'm intimately familiar with the stock. I know how it trades. It's being accumulated for sure. I'm part of the accumulation. So once again, VWAP as a validation tool. Man, you seem to like this stock SRAD, Kenny. It hasn't really done anything over the last month, hasn't it? Because every day where it's up, it gives you a decent short opportunity. And when it's down and it breaks VWAP, it tends to do what we're witnessing right here. Ass crack, faux show over the VWAP, roll over, faux show, back above the VWAP, back above what we call the ass crack breakout. You got to love it. The Kardashian bottom, the bigger the butt cheek, the bigger the break. This one was more of a smaller butt, but crack enough right there. That's when I was suggesting you guys buy it, 41.42. But the orange line is prior day VWAP. And what we've been doing now for 13 years is when you get a 1 minute multi-day, VWAP, reversal, stock goes up a little bit more. And you get paid. Wonderful. Right? I don't mind if you sell it all right now, because if you're sitting there, you just did this trade with me, why not take the money? Same thing with the SEDG. So let me show you SRM. Now, normally, I ain't going near these pieces of shit, garbage, worthless crap. You know this thing's going to zero. But when a stock gets pumped the day before, and this was a 41-cent stock, somebody was buying it up, somebody was loving this thing from 40 to $1.20. It was already up 300% before the monster move. That's the they. They knew what was going on, right? So they're in. And today they're taking their profit. Now, the thing about this stock, and I affectionately call most stocks pump and dumps, but most times when you see a 41-cent stock goes to 10 bucks, the next thing that you're going to see the stock is it goes right back down, inevitably rolls over, and goes to zero. But when the pump and dump from the prior day starts to find some love, think about the other side. Me, the shorter that is short this stock, assuming it's going back to zero, which the shorter will be right, probably. They are most of the time, because most of these stocks suck. But when you get a faux show, and now you're back above prior day VWAP, and you're faux show broing, why not give it a shot? Because you got limited risk, and this is all underneath the VWAP. And this is why I kind of like this stock going into the close right now. Not into the close, going into the afternoon. It's showing you everything. You're telling me nothing. You're showing me everything. Crazy. Your son, fuckhead, left his wallet in dead man's hand. This stock's telling us that they got the seller out of the way pretty quickly. Some buyers showed up, which looked just like any buying underneath VWAP is still short covering. We haven't even got the buying going yet. So now that it's faux showed again under prior day VWAP and has come back, so I'm still in a little bit. I did this trade from over at 705. I got sun at 730. When it hit 750, I dumped the rest, whether it be lucky or good. And then back above prior day VWAP, I'm back in the stock at 726. So I'm right there. I'm right there. As a matter of fact, but the reason I'm back in is that I got paid once. The stock faux showed and starts to bro. I want to be part of the bro, and I came in right here. I'm sorry. Where am I? Oh, I'm shit. I'm in right here. I'm in at 737. I'm sorry. I'm in right at this price. So 737, I'm in right at this price. So if you want to buy more, you're at the same exact price. So I missed the faux and the show, and I bought the bro part. So 737. But the thing is now that I could be in this weird pump and dump piece of garbage with basically 30 cents of risk. Because I know there's no way in hell am I letting it go back below 717 without selling 50% and the other 50% down there. Voila, risk defined. But if this stock does get pumped again and you break VWAP for the first time later today, this bad boy could be ripping to $8.20 in no time. And then if it starts to get going, then what happens? Everybody with their scanners and all the discords and the websites and the Reddit mafia, they all start seeing the pump and dump. Hey, that SRM's back. And they start buying it, and next thing you know, a frenzy, and for all we know, this thing's right back to 10 bucks. And it all starts with a little faux show bro action below VWAP. So I'm digging this name today. I got paid on it once, and so far so good on the second entry. And that's kind of where we're at. So, what else we got going on? Let me show you. What else we got going on? I really didn't do much today. It was SEDG, SRM, Qs. Now, I got to tell you, as a shorter, as someone who has not made money shorting, you'd think I would have, right? And considering the market crashed, I was short for half of one of those days. I was a buyer on the tariff conundrum. I'm dying to short something. I really am, right? So I'm not playing these little pullbacks. Because if the market's going to go down, and right now we're at an inflection point, right? We're butting up against all-time highs, and we're having some issues. And I don't want to speak rationally, but the market's acting rationally right now. It usually doesn't. It's consolidating a massive, massive run. We were below 402 on the Qs. We were at 393 that morning. So this is a monstrous consolidation. I think the consolidation is going to lead to a breakout. But if it doesn't, this is where these multiple time frame VWAPs will come into play. As you're seeing, prior day VWAP today is acting as resistance. So I look at 5 days worth of data and we're still right there because now the market's consolidating. So the more data we look at, it's really not helping us too much. So you got to go and extend that. So you go to 10 days, right there. How about 15 days? 15-day VWAP, and that's the price that we basically held. Now, again, it's been adjusted. I'll show you on 20-day now. Here's 20 days worth of data. There it is, kids. Now, you know, I didn't draw that line to prove my point. My point was proved because that line was there. That's the 20-day VWAP. And you see how that's now our new trend. So if this market is ever going to go down, and here's a nice simple tip for your Uncle Ken. Short stocks when they're going down. Amazing, right? It's amazing. Short stocks when they're going down. There's nothing going down right now. We're just pausing and consolidating. This isn't down. Down. And if we start to go down, there'll be plenty of room to make money on a short. But you don't want to start trying to be a hero. So what I look for is prior day lows. So I go back 3 days now. So today's Tuesday, Monday, Friday. So let's go 5 days. I'll show you the 5-day chart. But I want to show it to you on an hourly basis. So you could get all the data that we just witnessed. So here's 5 days on an hourly. Right? These recent lows. If you think the market's actually going to go down, you know what you're going to have to see? It actually go down. Not pause and go sideways. That's the sucker bet. That's where I used to get my ass kicked. Oh, every pause, every moment where we tick down, I thought that was the end of the bull market. There is no end of the bull market. Right? It's a perpetual bull market that never ends and never will. So if we can break some recent lows, we're going to then what? We're going to retrace to those prior lows. And then if those prior lows don't hold up, so right now, I know this might sound funny, but this price, this trailing 20-day on an hourly basis, to me, are generational lows until this market proves to me that it's allowed to go down ever again. And it ain't going to happen on an Iran-Israel conflict that's been around for 3,000 years. Give me a new reason. And you know when you should be scared? When the market's going down because of nothing. That's when you know it's going down. Hey, why is the market going down? I don't know. If you could blame it on something, it's just temporary. And that's what I've learned after 30 years. Market starts going down and you don't have a reason for it, nothing in the news, and we're going down and prices are getting lit up and we're breaking prior day VWAPs, then you know it's different. Right now, this is just a big fat consolidation. And let me show you, CoreWeave is the market. This stock has now tried to sell off 6 or 7 different times, right? And, oh, look at me, I'm getting booted. There is something wrong with the internet right now. You guys got me still? I think there was a surge or something. You see me, Ben? You got me. Yeah, they got me. All right, so here's another one. So this stock to me represents the entire market. It's the high flyer of the moment, CoreWeave, right? And what I love about it mostly is the opening day. When this stock came out, the IPO, I saw 2 articles written about it. One guy said, life in their industry, whatever they do, I don't know what they do. Life in their industry wouldn't exist without their existence. We wouldn't be able to function as humans without them. And then the next analyst came on and he said, this is the most worthless, dumb company I've ever seen. They do nothing. They serve no purpose. You should sell the IPO at $35 when it comes out. And I was like, wow, that's some extreme negativity. I'm in. And I bought the stock. Because that same rhetoric was the same thing I heard about Palantir. And I knew Palantir was going to be a great stock because it's the CIA. The CIA ain't going to lose money. Palantir is like owning the wing of the CIA. And I still own Palantir. I only got 100 shares, but stock's going to 250 and 1,000. You know what I know. Everybody knows it. So CoreWeave, right, is the same situation. This stock had a blow off top twice and still came back to break new highs. So when you see stocks like CoreWeave, and how was I hip to the market correcting back in February? Stocks like Reddit started to sell off in February inexplicably. Stocks like Palantir started to sell off in February inexplicably. Stocks like Carvana started to sell off in February inexplicably. No reason. That's an organic sell-off. That's, maybe this market actually wants to go down moment. And that's what I'm kind of waiting for. I want to see an inexplicable moment of market weakness. And then I'll get excited about being a shorter again, because right now it is a terrible, horrible way to live. And I'm sad, a little bit sad, because man, I used to love shorting stocks. Because shorting stocks is fun. Shorting stocks is great. You know why? Because we're doing something that most people don't even understand. We're making money when other people are losing money. That was my favorite part of shorting. While everybody's crying and screaming, I'm going, this is awesome. I remember the days where I'd come out of my office, a guy, broker or an ex-trader, a friend of mine, coming, hey, with his hand up, ready to high-five me. Man, the market's kicking ass today. You must be killing it. Get away from me, jerk off. I was short all day. I'm getting killed. And then the next day, oh man, this fucking market's getting slowed. I'd be like, yeah, you want a high five now? So it's all about perspective. But shorting right now is just a bad idea. But we're so close, is what I'm trying to say. So in the next couple of days, and again, we're off on Thursday. We're probably going to rally Friday. These levels, and going back to the original conversation, if you could conquer what we do on a daily basis, then you could conquer the world. Because the chart patterns that we use and the attitudes that we have are good for the day, the week, the month, the year, your life. And if anybody's interested, just email me directly, kennyglick@AOL.com. I'll set you up with a username and a password and come hang out with us for a couple of weeks. And don't take my word for it. You're going to take VWAP's word for it. You're going to take price action's word for it. And you're going to take Solid Steel's Jello extraordinary algorithm. I got to come up with a better name for that. You want to take his word for it or his algo's word for it. Because all we do now, because we're jaded, because we're cynical, is that we just take the market's word for it. You don't want to go down anymore? I ain't short stocks anymore. Let me know when it's safe, market, and the market will tell us. We'll be breaking prior day VWAPs. We'll be breaking specific levels, and none of that's happening right now. So you have to stay with the trend. And right now, we're losing the bullishness, but it's not bearish yet. When it is bearish, my friends, and I'm talking, if you want to get aggressively short, there's Thursday night lows. Friday, let me show you Fridays on a regular basis. So here's 3 days. I'll give you 3 days on an hourly just to show. 20 minutes is good enough. So I think that was an anomaly candle. Yeah, that was an anomaly candle. That doesn't count. I should actually erase that candle. But here are your recent lows, right? We're right there. I need these lows where people were actually thinking we were going to go. If we break the 530, we've seen the 530 break, we're going to get the 527.50. That's the major spot. The Qs break 527.50. I think we could finally get a sell-off that will last more than just a day. Now again, why are we having this conversation? I don't know. Because I am a shorter by nature. Shorter by nature. This used to be a rap group or something like that, right? Or was that Naughty by Nature? Hey, oh. But I'm dying to short stocks. It's just been a losing game. That's why I'm trying to tell you that even though normally I'd be short right now, look what you're doing. You're flirting with today's lows. Chances are you want to be buying. And here's the only difference. If you guys don't know, if you're just getting into this, if you're getting into this business, right? UVXY is now your new best friend. And the only reason I'm even entertaining the idea, and I'm glad my people are short right now, VWAP break. If UVXY is green and trending up while the market's going down, that is basically your only time to short. And you're seeing it right now. I'm not participating. I'm happy with my day. I usually don't even trade too much in the afternoons unless something vital is happening. And I'm probably going to wind up buying the cues right in your face and getting the squeeze into the close, and all you people are going to lose. But we'll see. But right now, if you're interested in what we just went through, this is what I do every day, 4 or 5 hours of it. And then we have my pal Solid at least 2 or 3 times a week. He comes on, and we just demonstrate the algorithmic nature of the market. All we talk about is VWAP on every time level. Price, VWAP, price, VWAP, why we're jaded, rinse and repeat. Cynical, don't trust the market, let it prove it to yourself. VWAP, prior day VWAP, and he's invented something called your mom's VWAP, which is the funniest name for any indicator in the world. Your mom's VWAP. And it works. Hourly VWAP meets your mom's VWAP, and you get set up for some nice trades. So right now, I know these guys are short, and they're laughing at me because I'm not short. I won't ruin your trade for you right now. I'll be looking to buy the dip. So if you want to learn more, if you want to hang out with us on a daily basis, this is what we do. My name is Kenny Glick. My pal over here is Solid Jello. We have about 120 or 150 members that show up every morning. We're all a bunch of degenerate, psychopathic losers, but we all love each other. We're all trying to do the same thing, and that's make a little bit every day, parlay that into some swing trades, and dare I say, investments. All right, it's been very nice hanging with you guys. I'll see you guys, and don't be afraid to email me. I won't bite.